We have so many investors buying Google stock. We have Joseph Carlson, we have Bill Ackman. We've got Dividend Talks on Twitter saying all the reasons why they like Google stock. So let's try figure out if Google stock is a buy right now. So here we have Dividend Talks on YouTube. Google dominates AI, cloud, and search, but Wall Street has it all wrong. It's growing faster than Microsoft, buying back $70 billion in stock, and it just made a 23B cybersecurity bet. Yet it trades at a massive discount, and I just looked it up. Yes, it trades at a very low price multiple. He says, here's why Google is the most mispriced stock in the market right now. So one is Google Cloud. So first, let me just explain what is cloud. Google Cloud is Google's business that rents out computing power. It's computing power, it's storage, and its software tools to other companies. It's what businesses use to run their apps, store data, and use AI tools, or through Google's global network of servers. And Google Cloud is growing a lot. Okay, look at how much it grew in the past. It was around the 40 to 50%. And obviously, it's not going to keep growing by 40 to 50% every year. But it's still growing between 20 to 40%. So it's growing at a high rate of clicks. Still, maybe in the future that will slow down. Maybe it will be more between the 20 to 25 range, but it's a lot. And it now makes about 10 to 12 billion in revenue per quarter. And as you can see here, it recently, for the first time, it became profitable. You see, that was in 2023, and that's a big deal. What it means is Google have finally turned its massive infrastructure into, well, potentially a money-making machine. It means the days of crazy investment and no profit are probably over, and, they will benefit from the investments that they made in the past. And if you ask why Google Cloud in particular, well, Google has some unique advantages. One is Google's AI tools like Vertex AI and Gemini. These are some of the most advanced in the world. Two is security. Google's cloud systems are considered among the most secure out of the cloud offering sites. And three, maybe the most important, is integration. Companies already use Gmail. They already use Docs. They already use YouTube. And they can easily just connect their systems to cloud. And because they're already using Google, it's just so easy to subscribe to Google Cloud. So that ease of use and that integration is key. The other thing about Google Cloud is they are doing very well these last 7 years. They've been gaining market share. The green line is Google, and as you can see through the years, they've just gained more and more market share when it comes to cloud. And Amazon, has gone down a bit. And Microsoft, of course, is doing well too. So that is very positive for Google shareholders, the fact that they're gaining more market share in the cloud business. And the reasons why, I've mentioned some of the reasons just before. And these are the current figures right now. So AWS is still at the lead with cloud infrastructure service providers. They have 30%. Then you got Azure has 20%, and Google Cloud has 13%. So it's really the big three players in this industry. But we also need to talk about the other elements of cloud, and Google recently made their biggest acquisition ever. It's all related to cloud. They put $32 billion to acquire the company Wiz. This is way bigger than any of the other investments. So this was in March 2025. As you can see, Google on Tuesday signed a definitive agreement to acquire a New York-based cloud security startup Wiz for $32 billion in an all-cash deal. I'm sure the shareholders of Wiz were happy with that. It's Google's largest deal ever, topping its $12.5 billion purchase of Motorola in 2012. So what is Wiz? Wiz is Google's cloud security company. It is now Google's. They own it now. It was founded in 2020. And what it does is it scans infrastructure for whoever they're quoting out to, whether it be AWS, Azure, Google Cloud, to detect risk combinations that could lead to data breaches and security risks. And Wiz has experienced some rapid growth. As of 2024, Wiz had $350 million in ARR, annual recurring revenue, and it's used by many Fortune 100 companies. And cloud security is super important in the modern day. Google's aim with Wiz is to fold it into Google Cloud. If you think about it, do you think these rich, cash-strapped Fortune 100 companies using Wiz want to have their data susceptible to attacks? Of course not. And that is why Wiz is so important, because it protects the cloud. It protects the data of these companies and it offers security. It's no use having an amazing cloud offer to companies and then, you have these data leaks and security breaches. No one wants that. You have to have a secure cloud operating system. So this is why Wiz is very important. But the third reason why Google may potentially be a buy, and why some of these analysts are saying it, is because Google dominates online advertising. This is Google here, and this is all the other players. Most of them you don't even know. Yandex, I don't even know. DuckDuckGo, I've heard once or twice. And Baidu, that's just a Chinese thing. And then look at Bing. Yeah, Bing has improved. It has improved, but it's still nothing compared to where Google is in terms of search engine market share. And when you look at it from a global digital ad spending point of view, Google control about 25 to 30% of all global digital ad spending, and they're competing against TikTok, Meta, all the rest. Google have 25 to 30%. So with this industry, search ads, it still remains one of the most profitable segments in tech. So the fact that they dominate it, it's just a cash flow generating machine, and you'll see that in the numbers, which I'll show you later on. Before we get into the next reason, I just want to talk about Skool. If you want to see the stocks that I'm buying, stocks I'm selling, get a course on how to invest for beginners, you can join my Skool group. I cannot respond to everyone on YouTube or my various YouTube channels, but if you want to access me, I'm in this Skool group here. So you can buy that in the link in the description or the pinned comment below. So now I want to get into the fourth reason why Google may be a buy. Fourth reason is YouTube is a media powerhouse. YouTube right now is beating cable TV in revenue, and it's only going to get worse for cable TV because YouTube has all the advantages in that space. So let's look at it. YouTube beats cable TV and ad revenue. They got 15 billion. Now this was from 2018. It's a while ago. It's probably even worse now. And then you got NBC and Fox and the rest of them who are doing well, but YouTube's just dominating them. In my opinion, I think YouTube is on par with Netflix's business. I actually think it's actually better. I would rather own YouTube than own all of Netflix. YouTube, they generate over $30 billion a year. And of course, recently they've been getting more into short form content with YouTube Shorts and AI-driven recommendations, which, many argue keeps users engaged for longer. I do think they need to be careful with AI and how they integrate it, because you do get a lot of fake, weird content that can lower consumers' satisfaction. So YouTube have to be very careful with how they integrate AI, but if they do it right, I believe they can make content better and produce even more content. Creators like me, we can produce even more content, but they just got to be careful by not recommending just rubbish content to everyone and just fake content. So they need to play the game right there, but historically they have been playing the game right. There's a reason why they destroyed Rumble, and there's a reason why Twitter video just cannot compete against YouTube. And then of course we need to get into the numbers a bit. So let's talk about price. Let's compare it to the other Mag 7 stocks. So if we put in Tesla, it kind of skews the graph a bit, because Tesla has a PE ratio of 260. It's expensive on a PE basis as of right now. So let's get Tesla out of this. But, Nvidia has a PE ratio of 53, Apple 39, Microsoft 38, Amazon 34, and Google is basically the same as Meta at 26. So it's the cheapest. These two are the cheapest, Google and Meta on a PE basis. So at least price-wise, it's quite a bit better than these other stocks. Way better than Tesla and way better than Nvidia. And look at their income statement. It's almost like a dream income statement. Revenue, 4 years ago, 5 years ago, it was 180 billion. Now it's 350 billion. So, that's a double. And then profit 4 years ago was 40 billion, and now it's 100 billion. So they've done really well in the post-pandemic years and in the pandemic years. And they're really good at making revenue and making profit, which in some ways, well, it is the most important thing for a stock, for a business to make revenue and make profit. And they just seem to consistently every year grow, which is amazing. And I guess people are worried that with ChatGPT coming in, how's it going to do? How's it going to do? Well, at least in the last year, they've done really well. So let's see. But those numbers are great. And then that's the income statement. Look at the balance sheet. They've run it really, really well. They've kept a tight ship. Look, $450 billion in total assets, $125 billion in liabilities. So equity is $325 billion. That's good. That's really good for a tech company. It's a lot of equity. And look, they got $100 billion in cash right now. So yeah, that's a tight balance sheet. Okay, of course we know they own Android. And you know, what I'm about to show next, a lot of people often forget that Google even owns these. One of them they don't forget, but the other two they kind of do. You know, they own Android, which runs over 3 billion active devices worldwide. So that's far more than Apple's iOS. It controls around 70 to 75% of the global mobile OS market. And that sheer amount of scale gives Google access to massive user data, which fuels search, it fuels ads, it helps them generate content with the maps. This is why Google Maps is so good. It helps with YouTube, and it helps a lot with AI models because they have the data. This is key. With AI, data is key. Elon Musk will tell you this. And Google are king of data right now because they've had so many users, millions and billions of users searching things and using their suite of things that they offer. And I think about Android, it ties Google's key services together through the system. You know, you got Gmail, you got Maps, you got Photos, you got Drive, you got YouTube, you got the Assistant. So the more people that use one service, the more likely they are to use others, which can boost engagement and retention. Then we need to talk about Chrome, this little thing here. This is massive. Chrome holds around 65% of global browser market share across desktop and mobile. It's the default choice for billions of users and businesses. I prefer Chrome out of any of the others. I know Apple tries to make you use Safari, but it's not as good as Chrome. It's not as good as Chrome. I always just want to click on Chrome whenever I go on and I use Apple religiously on my devices, but I always like Chrome ahead of Safari or Edge or Firefox or whatever else there is. They're way behind, and they're not competing. So Google's Chrome gives Google a massive distribution platform, and it's the gateway to how billions of people access the web every day. So that's another key thing. And let me just talk about one other part to their business. You would put this in their other bet segment, but it's a big bet now. Waymo, self-driving cars. Waymo was started inside Google in 2009, long before Tesla, Cruise, or any others began serious work on self-driving cars. They've got more experience. And now after 15 years of testing, a lot of people consider Waymo the most advanced autonomous driving system in the world, at least practically as of right now. You know, and there's a debate going on around that with Tesla. So whatever you guys think, you can think. But over 20 million real-world miles driven on public roads, Waymo has. Billions of simulated miles tested in their software. And they're operating fully driverless robotaxis in the US cities like Phoenix, San Francisco, and Los Angeles. So they're already doing it. It's not theoretical. It's already running a working commercial service in major cities. So I've given you a lot of the reasons why people are buying Google stock, why Bill Ackman's buying, why Joseph Carlson's buying. You can look at his channel to see why. He'll give you similar type of reasons, and why Dividend Talks like the stock and people like that. So, but don't forget, you know, Google still does have risks. I'm not one of those people that say, oh, they're just going to dominate ChatGPT and just absolutely dominate the search engine market share over the next 10, 15 years. I'm not sure on that. I think ChatGPT is still a real risk. Like, ChatGPT is good. I use ChatGPT quite a lot for a lot of different things. And I'm probably more, you know, technologically savvy than other people. And I think more and more people will go to ChatGPT. So it's definitely a competition, but, you know, I don't see a world where both can't exist anyway. So, that's Google stock. Don't forget, check the link in the description or pinned comment to sign up to the Investing Academy. You can see the stocks I'm buying, stocks I'm watching. And I plan on this being a very long-term thing. I can just constantly update you when I buy a stock and be more active in this community.